Welcome back to U.S. Farm Report. Trusted, timely, tradition.
The cattle market has moved into uncharted territory. While part of it can be attributed to the normal cattle production cycle, it also comes as a consequence of a painful drought. As cattle prices continue to crush records, just how long are these historic prices here to stay? That's our Farm Journal report this week with national reporter Michelle Rook.
Last week, fed cash cattle prices hit record levels, with the national weighted average steer hitting 180.29, exceeding the high set back in 2014. That was followed by April live cattle futures making all-time highs on the continuation chart. However, market analysts tell me this cycle is different than the last one in several ways, with some even calling it the bull market of their careers.
Record cattle prices were expected, with historically tight numbers after prolonged drought in the heart of cattle country forced liquidation of the nation's herd. However, it came earlier than many market experts predicted, forced by a tough winter in the northern cattle production areas.
We were pulled ahead on our yearling crop, and because of the severe weather, our calves aren't anywhere near ready that you typically might have in April, and still aren't, by the way. And this tightness of supply, I think, is finally trapped the packer here into he needs inventory. We're going into the best demand period of the whole year. The weights indicate how current we are.
This marketing hole may interrupt the normal seasonal pattern for cash prices, which usually peak in the spring and drop off into the summer.
I actually think because of the underlying trend in these markets, they've been going up for several months, that we may not see a lot of slump into the summer. Maybe it kind of plateaus here for a few months, but certainly we will continue to move higher, and there are more record prices in the, coming ahead in fed cattle markets.
Kremis says this bull market is much stronger, though, than the one in 2014, and he believes it could have a longer tail.
14 around here is known as the bull market of my career until this one, which I think is going to exceed that one because we got even more extreme numbers, and you've got a lot bigger demand base now than you did in 14. As long as something doesn't happen to mess up the demand thing, and then, of course, I'm talking about an international event.
So just how high could fat cattle prices go, since the cattle inventory isn't even into the tightest numbers in the cycle yet?
If we can take the cash market to the mid 180s on this run, which I think it looks like we're going to, I do appreciate your point about the tightness of supply is not even here yet. The way I would read the tea leaves here, the supply of cattle the first quarter of next year is much tighter than now. I'm making the assumption that there'll be enough moisture that will have heifer retention. So yeah, it could get pretty crazy.
The key will be how fast the cattle herd rebounds, which will be indicated by heifer retention. Now, in 2014, the cycle was cut short as producers quickly expanded.
The question, I think, is does it look like more historical cattle cycles where we see periods of declines in the inventory and relatively strong prices hold for several years, or the last cattle cycle where we bid away those profits and higher prices rather quickly as we expanded very dramatically?
However, expansion will be difficult in areas of the central and southern plains where the drought is yet to break, limiting regrowth of pasture and hay ground.
Certainly the numbers we see coming in from the central and southern Great Plains are rivaling some of our worst drought years. If you look at the numbers this week, April 16th, pasture conditions coming in from the southern plains, we see 58% rated very poor to poor in Oklahoma, closely followed by Texas at 57%. You have to remember that's a statewide value.
In fact, in Oklahoma, some drought-stricken counties in the north and west had their driest August to March period on record, and drought has deepened so far in April.
These guys are still faced with some additional cow liquidation. I've talked to several producers recently that now recognize they're going to have to do some additional culling and liquidation in those areas.
That will keep feeder cattle supplies tight and prices well supported. And while feeder cattle futures have hit contract highs, they haven't taken out the 2014 levels, and neither has the cash market.
Feeder cattle markets are not at record high levels yet. They're moving higher. We're at the highest levels for say Oklahoma cash feeder cattle markets. We're at the highest level since sometime in 2015. Those markets also peaked previously in late 2014, and we will certainly exceed those highs at some point in time. It may be a few months down the road, but we're going to get there in the coming months.
The other key to regrowth will be profitability. Cow-calf producers may finally be seeing some black ink, but it's only been the last couple of weeks many fed cattle operations made any money with the headwind of high feed and replacement costs.
There was negative closeouts coming in at the 165 levels. I'm kind of thinking these last 2 weeks, this rally from 177 to 185 for the northern guys might actually, it should put some green ink on, and unless, there's a few of those horror stories of cost of gains that really got out of line, but there's not a lot of meat on the bone here.
Sustaining this bull market will also rely on demand. However, the difference between 2023 versus 2014 is that year demand for beef was poor overall, with the average choice cutout prices more than $40 below current levels. Hopefully, that will keep the market stoked. I'm Michelle Rook for U.S. Farm Report.
Thanks, Michelle. And we'll get Naomi and Mark's thoughts on the historic run in cattle prices. That's next.